Welcome back, and let's carry on with some requests. Nice story. A friend of mine the other day, he said when I discussed Harley Davison a few months ago, he decided he's not going to buy himself a Harley Davison because he hasn't got the money, but he's going to put a few rand into Harley Davison. And I saw a beautiful falling wedge, and I think it was this falling wedge here, right at the bottom here, and he bought it at around 31. And he wonders now if he mustn't take some profit. So it rallied from 31.94 all the way up to 46. And I said to him, well, you can never go broke by taking a profit. And if I look at this massive rally, look at this nice rally, almost a lamp formation from 35 to 46, almost in one go, I will say maybe it's time to consider some profit taking. And for me, if I look at that resistance there right at the top, it's maybe time to lock in profit because it reached this level of 47, and I mean a rally from 36 to 47 in one go is maybe a nice beautiful rally, but I mean he can hold on to it because if it goes above 48.42, the top of that resistance there, we can maybe see that the next one is 48.70, and then maybe back to that all-time high of 49.96. Let us look at Hulamin. Now, Hulamin had a very interesting, you can almost say, year behind it, because it first worked on a wonderful consolidation year, all the way between 194 and 258. Then it started to rally, and it went up in one go from, let's say, 260 straight up to 4 rand and 1 cent. And then since then it had this beautiful higher low scenario where it went up as high as 5 rand and 6 cent, and then suddenly it lost all momentum and it dropped from 506 right down to 2 rand and 28 in a matter of a few weeks. But what do we see now? We see now again some beautiful higher lows. So if a share starts to repeat the action that we are getting used to, I will say use this little trend line, and if you do want to respect that, then every time that it gets to this, and that will be at 3 rand 3 cents, then you buy that, but use this line of 2 rand 80 as your stop loss, the support. And then if you're wrong, you just lock in your profit because then it can start to do this. But while it's doing that, maybe it can work its all the way up to maybe back to that level of 438. Sometimes you find that shares almost act like actors, and they play a certain role and they repeat itself. And I mean, here we've seen that beautiful move straight up. And look at this trend line. It respected this trend line every time for a few months. And same here, let's see. And if you want to do it, just stick to your stop loss to protect your capital. And maybe you can get a few rand or a few bob out of Hulamin. Well, PPC is really playing with the emotions of investors. I mean, look at this. In September 2021, the share went as low as 49 cents. Then it started to rally, and it went up all the way to almost, you can say, 6 rand. I can remember we spotted right there, we spotted this falling wedge scenario, and we said maybe we can nibble around this 49 cents. And what happened? I mean, it turned out to be a wonderful buy. But then right at the top, we saw this double top. And I mean, a rally from 49 to close to 6 rand, I mean, was almost unheard of. And that was in a matter of, I think, 5 to 6 months. So wonderful rally. But now the share has lost a lot of value as well. But what we see is we don't see a falling wedge. We just see a waterfall formation carrying on and take the share lower. So what you need to do now is just to wait. And what everybody wants to do is now is trying to catch a bottom. And for me, it's quite simple. If you look at this chart and you draw that little line in here, and remember this is a weekly chart, so you need to wait for a close on a Friday. The first little sign of strength will be if the share can close above R2.33 on a weekly chart, and it's trading now at R2.20. And if it does not close above R2.33 on a weekly chart, just leave the share alone so it can show you what it wants to do. And eventually you will either get, let's call it a falling wedge formation, you will get probably a inverse head and shoulder, or a beautiful cup and handle, or a rounding bottom. Eventually you will get to a point where the share starts to show you that there is a little bit formation. Remember, formations is nothing else than emotional games that the share is starting to show you that there is some other buying happening and it wants to tell you about. So at the moment, PPC, the chart is still telling us that the momentum is to the downside, and only above this line of 233, the share will start to look attractive. Below that, nothing else. And if it does start to move above 233, what is your stop loss? It will be R2.16. And if it gets above that 233, you can see 242, 268, and maybe even as high as 290 in a few weeks' time. But wait for the share to show you that things are starting to improve. At the moment, the informed capital is telling you that they're not interested and they still want to sell the share. So why do you want to buy the share? Let us look at Truworths. Truworths, wonderful company, sitting on a lot of cash, and they are doing well. And what do we see? We see a beautiful cup and handle formation here. And I want to show you. Let's just draw it in, and then you will see what I'm seeing here. And remember, this is a weekly chart. There's the cup, and we're busy working on the handle. But where's the place to buy the share on this weekly chart? And that will be only above that level of R66.55. And if it does play out, as always, I've got two levels. First of all, a conservative level. It can take the share, there you are, it can take the share to R80.64. And if it really starts to go, it can go all the way up to, let's get that level, it can go to 98.60. Remember, this is a top company. They're sitting on a load of cash, and they're doing the right things. So for me, it's quite simple. It's not the time to buy it yet if you believe in this cup and handle formation. And of course, be careful if the share starts to go below this little low there, and that will be below R46.55, because then suddenly this handle can maybe turn into a resistance, and then the share can maybe lose momentum, and it can maybe trigger a little bit lower. Because what I do say is, with all the inflation that is going around, our retailers will probably get to a point where they feel it. We've seen it the other day with Build It. They've came out and they said that the higher inflation really affect their customer base. People do not buy that much. So I don't know if it's going to happen with the clothing industry, but it can maybe happen, and then it will affect Truworths negatively. While we're on inflation in America, I'm looking at McDonald's share price. Well, if inflation in America is so bad and everybody is talking about it, then a share like McDonald's cannot be on an all-time high, because then people is still buying some McDonald's, and McDonald's are still making some money. So what do we say? Is inflation a hoax, or is people just buying stuff for themselves? And in this share, you either need to just chase momentum, or you must just wait for it to pull back. But what I do see here, and remember this is a weekly chart, I see a rising wedge developing, and a rising wedge is a warning formation, but at the moment the rising wedge got quite a way to begin, and that will, the share is trading now at around 277, and the rising wedge will only kick in at around 242. So the share needs to drop quite a bit. And I mean, look at this wonderful rally after the sell-off. We had an ugly sell-off from 267 to 230 in a matter of about 3-4 weeks, and then almost in 2 weeks it recovered the whole lot all the way back to about 280 US dollars. So for me it's quite simple. If I look at this chart, I cannot see that inflation is a real problem in America, unless we're sitting with a problem, and we know that around the world we're sitting with a problem that the rich is becoming richer and the poorer is becoming poorer, and liquidity is all around, and the world is giving liquidity to all that's got, and the people that hasn't got cannot get liquidity, and that poses a problem. So for me at the moment, if you look at McDonalds, I will not buy it. I will not chase the momentum. I mean, if you chase the momentum after the share rallied from 230 to almost 280 and you want to chase it again, how much is left for you? Maybe $3 or $4. I'll rather wait for it to come back to test this line and see if this line holds and then buy it. I will not chase it now, but just be a little bit careful. If this trend line breaks, the rising wedge can maybe break and take the share all the way down to 197. Thank you for visiting the website www.fransklerk.com for more info, and we'll chat again.